Welcome to Property Tax Consultants and TreppLoan. In this webinar today, we're going to walk through the capabilities, the data, the analytics, and the platform of TreppLoan and how it can better serve our property tax consultants across the U.S. To start off the presentation, we're going to look a little bit at what Trepp does as a company and what we provide for our clients. So for our tax consultant clients, we provide the industry's most comprehensive, easy to use web-based suite of data, analytics, and research. This is all wrapped up into a single source solution. We assist tax consultants by providing timely market data, analytics, both of which allow them to quantify the individual property performance metrics and county level statistics, as well as create benchmark comparable property grids and comparability analysis. All of this is powered by the largest available data set of securitized commercial and multifamily property, built on top of a robust analytics platform. Trepp's the only market provider that can give you parcel level financial detail necessary to successfully appeal property assessment. Our functionality and workflow is built out specifically for tax consultants to make the appeal process a seamless workflow. Trepp was founded in 1979 and is considered a leading provider of data and analytics across the globe. We've been in business for 42 years, and we have clients across the United States and even globally that leverage a technology and suite of tools that we're going to cover today. So I think it's important to highlight at a high level some of our commercial real estate capabilities. Our tools used exclusively by investors, brokers, appraisers, tax consultants, and asset managers. The workflow components of the tool allow for each of those recommended users to leverage the technology in a way that makes them more efficient. We'll talk about that in a few other slides. So from the tax consultant perspective, it allows consultants to identify value, qualify CRE loan and property opportunities from a business development perspective, identify off-market transaction opportunities, again, from a business development perspective, as well as come up with accurate assessment or valuations for properties for the appraisal. You also can analyze CRE performance trends by asset type, with detailed property characteristics and line item income and expense data. And then you can put all this together to manage all of those. For our asset manager clients, they manage a portfolio of properties, but tax consultants are not too dissimilar in the fact that you have a portfolio of clients, and this allows you to have a single source repository of all of that data. So it actually increases efficiency, which we'll highlight in a moment. So TreppLoan, as we talked about earlier, is comprehensive in nature. It's very intuitive and easy to use. It's based on a web-based application, so it's accessed by our users using a simple login mechanism with a username and password. It has robust analytics and deep research built into the platform. For our tax consultant clients, they've been able to leverage these tools to prospect for new business, looking at both sponsor and true owner data. So Trepp actually tracks the named owners on the assets contained in our system. So from a business development perspective, we cut out a lot of the intermediary steps that are required generally to find out who owns a property behind the LLC. We've partnered with industry leading companies to provide true owner data that parses the LLC, as well as having the sponsor data provided from the loan servicer. This can really turbocharge your efforts in terms of business development. We also have the ability to quantify individual property performance. This is because Trepp's written into the reporting structure for any loan financed using CMBS, which is commercial mortgage-backed security, Fannie Mae, Freddie Mac, or commercial real estate collateralized loan obligations. So every quarter, we actually get updated financials provided directly from the borrower's lender into the Trepp data set. It's as close to real-time actual financial performance as you can get in the market. We then have the ability to take those property level metrics and roll them up into aggregate market statistics. And we have some really robust infographics that we'll show a little bit later in the presentation that give you as a consultant the ability to go into a market with just a couple of clicks and get a really good feel for what's happening at the market level, both in terms of delinquency, performance, occupancy metrics, rent levels, expense ratios, et cetera. And then you can take all of that data, wrap it up into a comparable property or benchmark comp grid scenario, as well as creating appraisal models or income models to actually do valuation in regards to the assessor's assessment. So the things that this really allows tax consultants to increase from a productivity perspective is their performance. So with the granular line item income and expense detail, as well as below the line capital expenditure data, consultants now have access to data from the Trepp platform that they otherwise wouldn't have unless it was for a property where you're currently the representative. But as we all know in the business, the assessor has access to a lot more data due to the nature of them having to hear every appeal. So when it comes time for litigation or settlement conference or appealing the property value, a lot of times the tax consultant's at a slight disadvantage because you may only have access to the property data on the subject property that you represent. With the Trepp platform, you would actually have access to that same level of line item detail, but for all the properties in the data set. It really changes the dynamic of the conversation as you build comp grids and other metrics to showcase why you think the property you're representing is overassessed. It secondarily increases efficiency. When you can quickly determine comparables and you can integrate those comparables into your workflow in a streamlined manner, it increases the efficiency, which allows your teams to spend more time on business development and less time on creating evidence packets. As we've talked about with increases in performance and efficiency, obviously generally leads to an increase in success. So as you have better data and more data available, you're able to accurately create, better comparable grids. Then obviously the end result is that you get more value reductions. It also acts as a tool to help prevent your consultants from being surprised by the assessor by properties that have been refinanced and have appraisals or other market data available to the assessor that your client maybe hasn't shared with your consultant. So the worst thing that can happen is for a consultant to go into an appeal not knowing that the property owner just refinanced the property 3 months ago, and then make a case for why the value should be less, only to have the assessor say, well, this doesn't make sense because 3 months ago, this property was just appraised for X, which is significantly higher than what the consultant's asking for. This acts as a tool to prevent that from happening. And it even allows the consultant to build up a case as to why they feel maybe that refinance appraisal is irrelevant to the valuation for assessment purposes. The last thing that it increases is the ability to partner. So Trepp actually has an advisory services team that works very closely with our tax consultant clients that can do custom advisory work for the consultant. So if you're in a jurisdiction where you need to do a really deep dive on big box retail, or you need to do a really deep dive on lodging and franchise fees, or some of the more nuanced components of the assessment industry, Trepp has the resources, the experience, and subject matter expertise to really help our tax consultant clients in a partnership fashion. It also allows you as a consultant to bring new ideas to us to enhance the product so that you guys continue to have growth and success. So let's get into the data a little bit. So this is the data that's currently being used by our tax consultant clients. So as we've highlighted at the beginning of the presentation, we track some fairly distinct lending markets. So we track the CMBS, Fannie Mae, Freddie Mac, and the CRE CLO securitization market. So any loan or any property that takes out a loan using one of those financing mechanisms, Trepp's actually written into the reporting structure to receive a copy of the origination packet as well as ongoing surveillance for the life of the loan, with financials being a component of that. Those financials are generally updated every quarter, although in some cases on the really large assets, they only have to report financials semi-annually. When we say financials, though, we're actually talking about the operating statement, detailed property financials. So this is a line item operating statement all the way from gross potential rent down to net operating income and even below the line to include capital expenditures. If it's a multi-tenant facility, such as office, retail, or industrial, where there's leasing commissions, we would also have that in the data set as well. So this income and expense data comes directly from the owners or the borrowers. They provide that to the lender, and the lender sends it to Trepp. The appraisal amounts that are included in the system can be used as a proxy for market value to create models. They also can be used, as we said before, in a way that you're not surprised at the appeal hearing. The other way we've seen our tax consultants clients leverage the appraisal data in our system is to showcase how much better than the market they are at performing for their clients. So for example, on this particular screen, there was an appraisal done in July of 2017 for about 120 million. So let's assume as a consultant, you're able to get the assessment down to 60 million, even though there was a refinance appraisal for 120 million. Now, when you're doing business development, you can tout to your potential clients that you, on average, have assessed values at 50% of their most recent bank appraisal. So while that appraisal amount may not help you on the front end of the appeal, it certainly can be used as a driver for business development. Highlight how much better than the market your consultants are at getting lower assessments. You can also upload your own property data into the system to help create benchmarking or model creation in the tool. We'll highlight that here shortly. This is a representation of some of the infographics that I talked about a little bit earlier. In this example, we're looking at the Houston office market. What this does is it actually creates a heat map by MSA and then allows you to drill down into the individual counties within the MSA. But at a high level, at the MSA level, it's going to give you some loan performance metrics. So we have a pre-built dashboard that will subdivide or delineate the data into three categories. So watch list, delinquency, and debt service coverage ratio less than 1. So in this one snapshot, I can see as of the time when this was taken that the watch list properties in Houston office accounted for about 26% of the properties that we were tracking in that market. So 873 million or 50 properties in the Houston MSA that were office were on the lender's watch list. So the watch list by definition generally means that the property is not necessarily missing payments, but that there's something happening either on the financial side. So debt service is less than 125, delinquency is more than what the loan covenants call for, or there's some sort of life safety issues or something else about the property that the lender doesn't like. Therefore, they add it to the watch list so they can keep track of it at a little closer level. The delinquency sector in this case was about 8% of the market, about 274 million, comprised of 8 properties. This means that the property is at a minimum 30 days behind on their mortgage payment. It goes all the way up to include the REO and foreclosure process. So as properties continue to go delinquent, if that's the case, we'll track it throughout the process. So we'll actually denote if a property is 30 days, 60 days, 90 days delinquent, or if it's already being included in the foreclosure and REO process. And then debt service less than 1, again, this is really great evidence for the consultant to leverage at the assessor's office to say, there's about 15% of the office market where the owner is having to pay out of their pocket every month the mortgage payment because the property is not even producing enough revenue to cover the mortgage payment. So this gives you as a consultant the ability to come in at a more macro level and demonstrate to the assessor or to the appeal board why you think the property is potentially overassessed based on some market factors that you otherwise probably wouldn't be able to quantify. We also provide underwriting trends, which consist of outstanding and current balance. And we have income and expense benchmarks where we give you a weighted average year over year for the revenue per square foot or per unit if it's multifamily or a hotel, and then the weighted average NOI per square foot. We also track the weighted average trailing 12-month occupancy. So again, instead of having to have your staff create these types of infographics internally, these are a simple one-click export or print to a PDF and can be included in your evidence packet very quickly. So here's an example of how a consultant could take the data from the Trepp system and leverage it to indicate a value reduction when going to appeal. So here's a property that's located outside of Houston in Pasadena, Texas. It's a 696 unit multifamily property built in 1978. So you can see the property's expense ratio is considerably less than the median of a comp set located in close proximity to the subject, about 14% less. You can also see the comp set median assessed value per unit as compared to the subject. So the subject property in this instance is being penalized due to the fact that it's operating at a better operating percentage on the expense side than the marketplace. So just because the ownership is more prudent in this scenario, they shouldn't have a higher assessment because they're competing with other people in the marketplace. They're operating more efficiently. If that more efficient operation leads to a higher assessment, it actually becomes a competitive disadvantage for that owner. So as a consultant, this would be some data that the consultant could take to the appeal board and indicate that they have looked at the comp data. And again, it's not based off of asking rents or survey data based on real property performance. And you can actually quantify what the comp set expense ratio is at the median, as well as their assessed value. And you can see here towards the bottom under the indicated values, what those indications would reflect in terms of a total market value. So this property in 2019, for illustrative purposes, was valued about $56 million, $55,500,000. And using the Trepp data, you could indicate justifiable value of a low of 33 million to a high of 51 million. So if the consultant went in based on that data and said, look, we're going to look at 35,120 is our requested value, this data could indicate almost a $20 million plus reduction for the consultant. Again, this type of data, these types of analytics and market metrics are easily quantifiable in the platform and can be included as part of a seamless workflow with your existing processes. So we're going to do a little deeper dive now into some of the individual property data that we track. So again, this is representative of a Houston office complex. So we have some really nice photography of the property provided by the lender. And then we have some really granular lease date level data that the consultant can leverage as part of their appeal package. So in this particular example, we can show you if these offices have seen new leasing activity, what the renewal velocity looks like. So you actually have access to the named tenant, the lease type, the square footage associated with either the new lease, the expansion, or the renewal, as well as the lease start date and the lease term. You also get access to the full rent data, so you can see exactly what the base rent is per square foot. So this would be the triple net base rent. What's really interesting here, though, is that you can see what the annual rent increases are built into the lease term, as well as the tenant improvement allowance and the free month's rent on a month basis. And so you can actually see the TI allowance broken out in a dollar basis. So you can see the second comp there, Greater Houston Dental Society, got $15 per square foot in tenant improvement allowance. And they also received 5 months rent free from the landlord. Those components are very, very hard to come by in the marketplace unless you're actually a principal to the deal. And Trepp provides that data across the spectrum of multi-tenant facilities. So you would have access to tenant improvement allowance data as well as free rent, which can be really impactful when you go in to make your appeal at the assessor's office, especially if they don't consider tenant improvement allowances or free rent to calculate an effective rent. You now have the necessary data and tools to do that and then showcase it based off of actual data. Additionally to that, you have access to sales comps data as well as market research. So in this particular example, we're highlighting this office complex located in Houston, which is Greenway Plaza. I think it's built of about 16 different buildings into one general economic unit. So you can actually see what the inventory is for the submarket, what the vacancy rate is for the submarket, what the quoted gross rental rates are, as well as square footage, net absorption for the subject property, et cetera. In addition to that, you see the office comparable sales. So for this example, being in Texas as a non-disclosure state, this would be really impactful data. These sales are hard to come by. And in addition to the just raw sales price, the consultant would also have access to the occupancy at the time of sale, as well as the overall cap rate indicated from the sales price. So this allows you to have a lot of different data points, some of which may not be totally beneficial for you, but again, it allows you to have some more color and commentary around where the assessor maybe is sourcing their data from and allow you to create a defense mechanism for that data if they present it at a hearing. It also, in this case, shows bulk office sales. As we mentioned, this was a multi-building transaction around 16 buildings. And so in this particular example, we actually give you individual office sales as well as multi-building bulk office sales comparables as well. That wraps up the data component of this relative to the direct use case for the tax consultant in the platform. But there's another component that Trepp feels the consultants could really take advantage of by leveraging our tool. And that's creating their own internal income models for use against the assessor. What we do and what we're going to show here is a general highlight or overview of what we know assessors are charged with in terms of creating a mass appraisal model in terms of systematically valuing groups of properties instead of just individual properties, et cetera. So we have the IAAO definition here. Effectively, assessors are required to use mass appraisal models, as of a statutory valuation date that creates an assessment, and then they're supposed to test that assessment using standardized procedures and statistical testing. In order for them to do that, mass appraisal requires that they develop a valuation model that's supposed to replicate the forces of supply and demand over a large area. It uses statistical testing to gauge the accuracy or consistency of the valuation. So there's a 3-step process for the assessors on their side, where they create the model by delineating the properties into classification or appraisal groups. They collect the data, they interpret the data, they create the model, and then they have to apply the model. Once they get to this step, this is where the consultant gets brought into the picture. The assessor applies the model, makes adjustments as necessary, and effectively sends out a notice of assessed value. They also provide their internal testing, et cetera, to showcase why they think their model is representative of market value. What's been interesting in our foray into this marketplace is that tax consultants generally have been very granular focused on just the subject property that they're appealing. And they haven't spent the time or dedicated any resources to creating their own version of a mass appraisal model. That can be a little bit short-sighted in the sense that generally as a consultant entitled to see the underlying data that the assessor used to create their model. And now that Trepp has a modeling capability built into the tool, as a consultant, you could effectively replicate the model from the assessor, and then also build a consultant model, which maybe includes some additional properties or some additional adjustments based on your knowledge of the individual characteristics at the property level. So this will just be another tool in the tool belt when it comes to the appeal to showcase, not only do you feel this property is overassessed based on the individual financial performance of that one particular asset. Additionally, you have the heat map and other stuff that we showed on the infographic. And then to round it all out, you have built your own model using the data provided by the assessor, in addition to the other data points that you maybe have internally and that you've loaded into the Trepp platform. We're going to walk through the process of creating a mass appraisal, or what we would consider an income model for tax consultants. And so in this example, we're going to look for properties located in a particular submarket outside of Houston, Texas, that are multifamily, garden, low-rise in nature, that have more than 100 units and have had a loan taken out between 2016 and the current time frame. When you do that search in TreppLoan, it's going to return the results that meet that criteria. In this example, there were 24 unique properties that meet that search criteria. It actually maps the properties. It gives you a boundary outline of the submarket. So again, this is a really great infographic that you could take into the assessor's office to say, all of my comparables have come from this same submarket as the subject property. So in addition to the deferred maintenance or other items that you're maybe going to bring up for the subject, you can also showcase that here's a bunch of other properties that are in that same geography that faces the same external forces that the subject does, and here's what their performance indicate. The previous screen showed you the properties on a map view. What this screen shows is the properties on what we call the list view. In the list view, the user, or the consultant in this case, would have access to about 150 data points for each individual property. We give the user the flexibility and the functionality to create a list of attributes that meets their needs. So obviously, you probably wouldn't want to include all 150 plus data fields for every property because it gets a little bit cumbersome. But if there's 20 or 10 or 15, salient points that really drive your message home with the assessor and or appeal board, you can create a list that just has those 15 salient data points. You can create that as a custom view, and then you can save that view so that every time you run a search and look at the property results on the list view, it shows just those same 15 fields each time. Some of the characteristic data that we showcase are year built, year renovated, number of units, et cetera. And then, as we've discussed earlier, you have access to the full level property financial details, so revenue, expense, net operating income, and cap rate. Once you've done your search, gone to the list view, you can select the properties that you want to utilize to include in the portfolio. So this is the first step in creating a model, where you effectively copy the records over from the Trepp front-end platform into what we call a portfolio. You select the properties, you click Add to Portfolio, You then select New Portfolio, and then you give it a name and you hit Add. Once you do that, you'll see a couple of new items pop up on the screen. One of them is the valuation date. The other is the time trend analysis. Once you do that, you can actually select the assessment date. So again, this workflow is built out so that as a consultant, you can effectively create your own version of a mass appraisal income model to match the assessor. So in this case, if the assessment date was January 1st, you can use that date as your valuation date in the platform. If you think the market has appreciated or depreciated or stayed the same, you can apply a time trend. So that could be a zero time trend if you think there's been no change in the market. It could be a negative if you think the market has gone down, or it could be a positive if you think the market has gone up. Additionally, you can add your own properties to the portfolio. If I'm a consultant and I've run a search in the Trepp platform and found 24 properties that meet the criteria, and I also have 6 other properties that I represent, I could load those 6 properties, even if they're not in the Trepp data set, into the portfolio by simply clicking Add to Portfolio and typing in the address. Once I add it to the portfolio, I can then input all of the financial metrics that we would utilize in the Trepp platform and input that as a user. So you can do a direct side-by-side analysis of the Trepp data in addition to the user uploaded portfolio data. Any data that's uploaded into the platform by a user is ring-fenced to just that account. So only the user that uploaded it would have access to it. Trepp does not leverage that data in any capacity to create derived data or leverage it at all. The only persons that could see that beyond the person that uploaded it is anyone that person chooses to share it with internally. You have 4 or 5 people on your team and you wanted to work collaboratively within the portfolio. The user that created the portfolio and uploaded the data does have the capability of sharing it with their teammates. If you actually wanted to create an income model, once the properties have been uploaded, you've selected your assessment date, you've put in your time trend, then you click on a Get Valuation button, and then it'll actually take that underlying data set and it'll map them again, just like we saw in the previous screen, but now it actually assigns a comp number to each of the properties utilized in the model. So now, in addition to just seeing how close in proximity they are, you could actually reference each individual property by their assigned number in the model. It also will add the user uploaded data on the map. Those will have a slightly different color instead of this teal green color that's visualized today on the demonstration. The user uploaded data would have a blue icon so that you would be able to delineate what was Trepp data and what was user data. Once this step has been completed, you just simply click on the model button at the top in the gray ribbon, and then that will actually create the income model by property class. In this example, you can see that the income model is created and effectively creates an income pro forma from gross potential rent all the way down to NOI and then a cap rate, leaving the user with an indicated value per unit or per square foot. Now, in this example, we've delineated the classes by class A, B plus, B, C, and D. That's something that the user gets to determine. So again, this is another way that the consultant can leverage the tool to benefit them in the appeals process. Maybe you feel like the assessor has overclassed a certain property, and so they're calling it a class A when really it should be a class B. Now you can actually in real time build out this income model showing why that property really should be a class B. So if you have any type of issues related to classification of properties, this allows you as the consultant to really quantify that and then visually demonstrate to the review board or to the assessor why you think your position is more correct than what they have established. In this case, once the model has been created, you simply click Apply Model, and it would apply those individual value per unit multiplied by the number of units or square foot to give you an indication of what the assessed value should be. So in this particular example, we're going to stick with the Class B properties. You can see in this model for the assessment date as of January 1st of 2020, what those indication of values are. And then we actually do a time trended appraisal ratio analysis. So this is where the assessor typically stops. So if the assessor created this model, they would use this as evidence at the appeal, and they would tell the review board, we have a list of comparables here that we feel accurately represent the market. We've done our statistical analysis applying the $56,502 per unit as our Class B indication of value. We've come up with a weighted mean ratio of 97.77% and a median of 98.44 with a really tight coefficient of dispersion at 4.18. So they're going to feel really confident in this model, showing that they've replicated, the marketplace using this model. Where the consultant comes in, though, is let's assume that you take every comp that's included in this list and create your own model, which would by definition give you the exact same results. But then you add 4 additional properties to this model that maybe weren't included in the assessor's model. If those 4 additional properties shift that weighted mean or median to say 108, now you have evidence that says we've used every single comp that the assessor provided, plus these additional comps that we've used that for whatever reason were not included in their model. And doing the same analysis, it indicates that they've assessed the median property at 108% of market value. So from a consultant perspective, you've now set a floor of saying you're entitled to an 8% reduction because the median property is 8% above 100. And then you go into your individual characteristic arguments of why this property performing even worse than that. This concept could allow a consultant to really transform that appeal process to not only indicate why they think their property should be worth less based off of the individual characteristics, but also allow them to showcase why they feel the assessor's model is incomplete or inaccurate. Once that's been done, you can save the model, and we talked about this a little bit earlier. Once that model is saved or the portfolio is saved, consultant can then share it with other users on their team. And in this example, you can see on the right-hand side where we have shared the mass appraisal model, there's a couple of options. So as a user, I can give access to this model or this portfolio to my coworkers in a view-only capacity, so they're effectively a read-only user of the data, or I can give them access to view and edit. And in that case, you could have multiple people working in the same portfolio collaboratively in real time. There's also some comment features in the portfolio. So if you have somebody using the portfolio in an appeal hearing and they're successful, they can leave a comment and that's tracked in the system and then would be notified. Any other user that has that portfolio shared with them would instantaneously be notified of the new comment. We've also included a change tracker in the portfolio tool. So there's some quality assurance built in. So if you're a supervisor or a manager that wants to make sure your consultants are doing what you need them to do to be successful, you can actually see with the time, date, and stamp when changes were made and who made those changes. You can also reverse the changes through the QA manager as well. One of the last things we'll cover here is if you didn't want to build out a full income model, we've still contemplated that the consultants may want to build comp grids or do some sort of benchmarking of the marketplace in the platform. So as a single step solution, if you upload properties or you copy property records over into the portfolio, you can then select them. And if you don't want to do the full comprehensive model that we just demonstrated, in this example, you can actually select the properties that you think are most comparable. You can turn on the feature that's called Calculate Selected, which effectively takes those selected properties and then creates a comp grid for the user at the bottom of the screen. So in this instance, you can see the average, the median, the min, and the max for each of those numerical or financial components showcased here on the screen. So as a user, again, if you think that a property is misclassed, you have the ability to classify the properties as you see fit in the platform. And so you can build really robust comp grids based on your own user-defined classification. And this shows a really nice range of value. So again, as a consultant, I just need to be able to showcase why the market supports my request. So not every property needs to be at the low end, but I just need to have a few properties at the lower end. And so in this case, I can see on the appraisal value, there's a range on the low end of 5.9 million up to a max of 18 million. If I look at the per unit values, the low is about 48,000 per unit and the high is 59,000 per unit. So this actually gives me some justification to come in and ask for something in that, upper 40,000 per unit range. Additionally, if you wanted to look just at the individual property, or let's say you're sitting down with an assessor and you're doing an informal discussion, we have the ability to actually allow the consultant to do a single property valuation in the platform. So in this example, you can actually click on the valuation ribbon once you've pulled up a property. And this can be conducted on a property that's stored in the Trepp data set, so one that we track. It can also be utilized on properties that the user uploads. So there's no limitation to the properties that can that this technology can be leveraged with. So any property in the United States, whether you add it as a user or it's tracked in our system, you can do the same type of single property valuation. In this example, this happens to be a property that is tracked in the Trepp data set. And the benefit of having it in the Trepp data is that we'll already have the financial information pre-populated for you because we're obviously tracking that. So I can see the fiscal year 2019 financials as my base year. And then I can actually, as a user, come in and do a discounted cash flow analysis for 5 to 10 years, depending on the projection or holding period. And then I can set the user defined growth rates for the income and expense line items. I can also manually override any of those individual components. So let's say there's some sort of external obsolescence like a pandemic or something else, wildfires that hit a particular market. If I think that in years 1 and years 2 that revenue is only going to be 50% of the base year, I could actually go in and override those to be 50% of the base year. But I wanted it to then track more like the linear progression of a 2% time trend in years 3 through 5. I can also leverage the tool to give me those same results for years 3 through 5, even though I've manually overridden years 1 and 2. So this has a lot of functionality built in to give the user ultimate flexibility. And this goes again all the way from gross potential rent down to the net operating income and even below the line to include capital expenditures, tenant improvement allowance, et cetera. Once you've inputted all of your assumptions, then you actually get 2 different types of valuation here on the single property tool. The first is a direct cap value. So we'll actually give you the Trepp calculated cap rate based off the data in our system. We'll also allow you as a user to input your own cap rate data. So if you look at surveys like CBRE, JLL, maybe you look at Citus or RERC, you can input those cap rates yourself. You can weight them proportionate to what you think the weighting should be. And then it'll give you an indication of value based on the actual in place, most recent NOI, your stabilized or projected year 1 NOI, and then whatever your exit year is. And then it'll give you a weighted average at the bottom. So again, this is some really nice quantifiable evidence to take to an appeal hearing and showcase that you've looked at all of the data, inclusive of multiple cap rate surveys, and this is what the indication of value is. Additionally, you get the discounted cash flow value, so you actually can put in your reversionary or terminal cap rate, get your exit year sales price, put in what the discount rate or hurdle is, and then it'll actually calculate for you the discounted cash flow value using all of the user-defined inputs. We then take all of those outputs, so in this case, the weighted average of the direct cap and the discounted cash flow value, and then give you an indication or a reconciled final value. Obviously, you as a user can weight those things as you see fit, and you can make those final reconciliation to be more in line with what your intentions are. Hopefully you found this to be informative and impactful for you. If you'd like to learn more about this platform or how we can highlight some of the additional use cases or how you can leverage this tool for your day-to-day business, please reach out to our sales team. We've included their contact information here with the slide. Thank you very much.